Hello and welcome to your own channel. Let's talk business once again. I'm Ravi and today we have something interesting to discuss. So let's start talking business. Thank you once again for watching my video presentation. As many of you know, I usually choose topic based on the question that I receive most frequently, whether through email or WhatsApp. When a particular subject generates a lot of interest, I take it as a sign that the broader explanation could benefit the wider audience. In today's presentation, we will explore one of the foundational concepts in the Lloyd Syndicate model called syndicate capacity. We will look at what it means, how it is managed, and highlight few key important points essential for understanding about the Lloyd syndicate capacity or Lloyd's market as a whole and how it operates. Many of you may have heard that Lloyd's stamp capacity has increased by 8% in 2025, and you might be wondering what exactly that means. In today's session, we will talk about it and we will break it down the concept in the simple terms. My goal is to explain it in a way that even someone new to London market can easily understand what I'm talking about. So let's go to the next slide. Now, what is syndicate capacity? The definition is, in the Lloyd's of London insurance market, the syndicate capacity refers to the maximum amount of insurance risk the syndicate is authorized to underwrite in a given year. It is essentially a financial limit up to which a syndicate can accept the insurance premium and cover the potential claim. It is absolutely essential in the insurance world to have some sort of an upper limit. Without that, you are simply exposing too much. So the syndicate capacity is the limit up to which you can take the risk. Now, if you can see the example over here, let's say we have a ABC syndicate with a total capacity of 500 million for 2025 underwriting year. And if you can break down this capacity, you can say that 200 million is coming from the corporate members, 150 million is coming from the individual names, and then 150 from MAPAs, right, or pool individual investors. Now, what does it really mean that a ABC syndicate can underwrite insurance policy up to 500 millions in exposure? If it is write a policy for a large oil rig worth 100 million, that 20% of this capacity is simply used. So you got the concept, right? The syndicate capacity is the limit for exposure, and it is absolutely important for syndicate to remain within the limits. Let's go to the next slide and see some of the important aspect around the syndicate capacity. Now, why it is important? It is important because it is essential for the risk management, capital allocation, and the regulatory oversight. Let's talk about it. When we talk about the risk management, capacity limit act as a financial safeguard, as I was talking about, ensuring syndicate don't take on more risk than they can afford. For example, if the syndicate has a 500 million capacity, it cannot underwrite 600 million. This prevent overexposure for the catastrophic losses, such as multiple large claims from the natural disaster. I mean, it's kind of like a mechanism to maintain or to control the risk or to manage the risk. The second important aspect of syndicate capacity is the capital allocation. Now, investors, whether individual or corporations, choose syndicate based on their risk appetite and expected result or returns. For instance, a conservative investor might prefer a syndicate focus on a stable, low volatile line like property insurance, while the higher risk investor might back a syndicate specializing in the cyber or maybe a political risk exposure. So having a capacity can even manage the return. If you are in a risk-free trading, then you might be having a low return, but a stable return, whereas the risky risk coverage may give you a high return, but there is a high risk. And the capacity act as a benchmark when you are writing those kind of a policy. Now, a most important thing is regulatory oversight. Lloyd's continuously monitors syndicate capacity to ensure the market remains solvent and stable. If the syndicate approaches its limit or underperform, Lloyd's may intervene by restricting the growth or requiring additional capital. This oversight protects both policyholder and the reputation of Lloyd's market. So definitely Lloyd's keep a very close eye on the syndicate capacity for the given year. If it is fluctuating, then Lloyd's will intervene, not only to protect the policyholder's interest, but also its own reputation. Let's go to the next slide. What happens if the capacity exceeded? Important question. If the Lloyd syndicate exceeds capacity, it means that it has underwritten more insurance risk than it is authorized or financially backed to handle. It is a serious issue. Multiple things can happen. A regulatory breach, Lloyd's will come and intervene, capital shortfall, and might be a reputational damage. When it comes to the regulatory breach, we talked about it. Lloyd's has a strict rule to prevent syndicate from exceeding their approved stamp capacity. Now, I'm intentionally using stamp capacity. We will talk about stamp capacity in a moment with relation to syndicate capacity. Exceeding the capacity would be a breach of Lloyd's regulation, triggering the immediate scrutiny. The second important thing is, obviously, Lloyd's will, if something is getting breached, Lloyd's will immediately intervene by halting further underwriting or require a syndicate to restructure or reinsure the accessories or impose a fines or sanction to the managing agent who is managing the syndicate. And Lloyd's is doing it because it wanted to protect its own reputation as well as the interest of the policyholder. Now, when it comes to the capital shortfall, if the large claim arises and the syndicate lacks sufficient capital, what does it really mean? The members or the name are liable for their committed capital. If that still is insufficient, then Lloyd's Central Fund will be used to protect the interest of the policyholder. Now you understand, if the capital goes shortfall, then the claim hit the Lloyd's Central Fund and Lloyd has to pay from the Central Fund, which means that Lloyd's is taking the extra pain for paying the claim for the risk which is written in excess of their capacity, which is not good. That's the reason Lloyd's maintain a very key eye on the risk that has been written by the syndicates. And then comes to the reputational element. Exceeding the capacity can damage the syndicate reputation and may lead to the loss of investor confidence and difficulty in attracting the further capital. And obviously, increase oversight from the regulatory point of view. Now, since all these things are very important, there must be some sort of a mechanism to actually keep a close eye on the syndicate capacity. Yes, of course, there are mechanisms which is required to monitor the syndicate capacity. There's a real-time monitoring, the annual planning and capital approval, and then solvency compliance kind of a thing. So Lloyd's uses the advanced system to continuously track syndicate performance and risk exposure. For example, if the syndicate being written an unusually high volume of cyber insurance in a short period, Lloyd's can flag this and investigate whether it aligns with the approved business plan and risk appetite or not. Now, each syndicate, when it comes to the annual planning and capacity approval, each syndicate must submit a detailed business plan called Syndicate Business Forecast, outlining its underwriting strategy, risk classes, and capital requirement. Lloyd's review and approve this plan before granting the stamp capacity. For instance, if a syndicate wanted to expand into the marine insurance, it must justify the move with the data and must demonstrate it has the expertise and capital to support it. Okay, and then finally, the Solvency II compliance. Lloyd's operate under the EU Solvency II framework, which ensures that the syndicate hold enough capital to meet their liability, even under the extreme situation, disaster scenarios, realistic disaster scenario, which covers this type of extreme scenarios. There are 6 or 7 type of disaster scenario. You can read about them in the internet. For example, a syndicate underwriting catastrophic risk must prove it can withstand 1 in 200-year event, or called as a black swan event, such as a major hurricane or earthquake, or without becoming an insolvent. So these type of compliance Lloyd's maintain when it comes to the syndicate capacity management. Now, I actually talked about the capacity and the stamp. So let's talk about it, what exactly these things are. So in a very clear, simple definition, syndicate capacity is the total financial backing a syndicate has to underwrite the insurance for the given year, say for example 2025. Whereas the stamp capacity is the official Lloyd's approved portion of the syndicate capacity, is the amount that appear on the syndicate stamp. Important, which is absolutely important to understand. In this example, and last week I published this on my Let's Talk Business publication. For example, a syndicate ABC got a total stamp capacity, or syndicate capacity, not stamp capacity, syndicate capacity of 600 million. Lloyd's approved stamp capacity is just 500 million. The additional capacity, they got it from the reinsurance. For example, you got a total spending limit of 500,000 in your personal capacity, and you can consider this as your syndicate capacity. Now, you have 3 ways to spend this 5,000. You have a credit card, saving, and cash. Now, just consider credit card limit as your Lloyd's approved stamp capacity. I mean, you can spend up to 3,000 from your credit card, not more than that, because that is your authority. You can relate this credit card limit as your stamp capacity, but you still have capacity to spend 2,000 more. And from where this money is coming from? This coming from your savings as well as cash. So the saving and the cash, you can correlate with additional capacity from the reinsurer or from ILS market, insured linked market. So this means that you have a syndicate capacity, which is your broader capacity, and then you have an authorized stamp limit or stamp capacity, which is authorized by the Lloyd's. And this is the main difference between the syndicate capacity and the stamp capacity. Well, I hope you have learned something new from this video presentation. Syndicate capacity, stamp capacity. As I said in the beginning of my presentation, that I got a lot of email and WhatsApp messages about this topic. So I thought to put a very quick explanation about this topic. I hope you have gained some knowledge, and all the best. We will meet in the next session. Thank you and take care.